Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning pre-market webcast. Okay, daily chart, and you can see the last two sessions, the bears have been able to reject attempts by the bulls to convert the 2800 area, and they were able to push it back as deep as 62.5 yesterday. The overnight low, 62.25. So 62, 63 is going to be a thing. You've got potential matching lows, double bottom, floor, whatever you want to call it down there. So the first order of business, if you're the bears today, is you're going to have to convert that area. They've bounced it from 62, 63 all the way back up. We're currently trading 79.5. They've traded into the low 80s. So what the bulls want to do is say, okay, well, we've established the higher low. It's 62, 63. They've got to get back through 83, 84, which was their issue back on Monday, when they could not break 83.75. And then you've got the upper band now right up around the 2800 area. By the time price would reach there, it'd be anywhere from 2800 to 2802. So if the bulls want to preserve this very tenuous upper band ride that they're on, which seems much more a function of time as it is a function of price, because you've got some fairly flat bands now. The bandwidth is underneath 5. Price isn't really going anywhere, but the bands are tight enough to be interacted with. You're not seeing, the upslope of an upper band ride, at least not yet. If the bulls are going to accomplish that, then they're going to have to go ahead and interact with the upper band and preserve it, because they need to convert 2800. If they can't convert 2800, then best case scenario, we're sitting in a 40 handle trading range, which is a lot of elbow room to get a lot done. We got about 32 done in the room yesterday. Yesterday afternoon, really nice directional shorts. We did 95.75, we did 87, then we did 73. All went very well. So the key to this market continues to be, and we were long in the morning, really nice long up to the highs. The key is when one side or the other demonstrates an inability to press their advantage. The key is you have got to get off that train and get on the train that's headed in the right direction. You can't be stubborn. You have to give things time to work or not work. You can't panic, but you have to be patient, and you need to be flexible enough to flip when you need to and get on the correct side of the freeway, I like to say in the room. This has been a flipper's tape. It's been a flipper's tape for all of 2018. There have been shorts that have worked for a period of days, then shorts stop working. You have to identify that. Don't be a stubborn short. Get long and take that benefit. There have been longs that have not worked, where you start to say, okay, that's not working. We have to get short, and then the shorts work for great benefit. The benefit in doing what works far outweighs the -1 or the -2 or the -2.5 you're going to take, getting out of something that's not working. And we're working on a 300 handle month over here, and that's coming off a 500, 600, 700 handle month last month. So as long as you're flexible in your approach, the key is in this type of volatility market, and it's still a big volatility market. It's not insane volatility market, but it's a market that's moving every day and putting in really decent ranges to work with. The key is don't be stubborn, don't be ideological, don't walk into a day saying I'm a bull or I'm a bear, because you're not. You're just a trader. And the key is you need to be on the side that is winning. If you're on the winning side, and you respect risk, the other stuff will take care of itself. And our goal remains the same: 4 handles a day on a full position on average every day. Those building blocks is what will build up your confidence, your ability as a trader, and ultimately your account. So is the market moving in much bigger chunks right now? Yes, it has been for the last 6, 7, 8 weeks, but we continue to focus on that one steady goal, because in being consistent, consistency breeds success, in my opinion. So don't be stubborn. When you need to flip, and then manage your trade accordingly. But this is the situation where if we can't get above 2,800, we're going to slip back down. by the same token, if the bears can't deal with 63, or if we do another leg down and we get involved in the daily mid-band, which is, you know, down and around 34.41 right now, but more importantly, the weekly pivot that is right at 50. If the bears can't deal with that area, then you have to start thinking long again. Be flexible. All right, everybody have a great day. We'll do some updates over on social. Come join us. Tons of new people coming in. They're liking what they see. It's a great opportunity to learn with a lot of people, and it's a really fun bunch. You know, a very serious bunch, a very professional bunch, but also a very fun bunch to spend the day with. So if you're on the fence, come check us out. Come take a trial and see if this is right for you. All right, take care. I'll catch everybody soon. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.